Good morning, everyone. So today we are going to learn treasury stocks in detail. Okay. So if you remember the first class, here, I explained that these are the normal balances of several accounts. Like if we have paid in capital, normal balance credit. Then if you remember this, that additional paid in capital sometimes debit, sometimes credit. Then retained earnings, normal balance credit, and treasury stock, normal balance debit. So this was the first class from this chapter. So we know that treasury stockholders equity, this is credit, normal balance credit. So the relationship between treasury stock and equity is opposite. So what is the meaning of treasury stock? Treasury stock means company buy back share from you. When company sell common stock, you can see that when company sell common stock credit, and few days later, company buy back stock from you, and it converted into the treasury stock. So common stock credit, and when you buy back it, that means when company buy back this stock, it becomes debit. So this relationship came from here. So what is treasury stock? You can see that according to this example, for example, January 1st, 2020, ABC company issue common stock. $10,000 shares. So company sell common stock, and we know that if company sell common stock, we learned this in our previous class, common stock credit, right? Common stock credit, and company sell 10,000 shares. Then few days later, like July 25th, ABC company buy back some common stock. So buy back common stock from shareholder, and buy back maybe 2,000 shares. So these two transactions came from here. Company sell common stock, then company buy back the common stock again from the shareholders. So I told you that when company buy back the common stock, these shares converted into treasury stock. Do you understand? When you sell common stock, the title is common stock. But when you buy back, that means when your company buy back its common stock from shareholder, it's converted into treasury stock. That's why you see that company buy back treasury stock and paid cash. So this money already paid cash, right? So shareholders cannot claim this money again because you sell it to me and I give you money back. So treasury stock is the minus sign with stockholders equity. Look at here. Treasury stock is the minus sign with stockholders equity. So as it is minus, so the normal balance of treasury stock is debit. And here you can see that common stock is plus sign with equity. So the normal balance is credit. So here we find that the normal balance of treasury stock is debit, right? So normal balance of treasury stock is debit. And it came from here. It came from here. Now treasury stock sometimes increase, treasury stock sometimes decrease. So we find that treasury stock normal balance debit, and we also find that treasury stock sometimes increase, treasury stock sometimes decrease. So when it is increase, when you buy back. So when company buy back treasury stock increase. So you buy back the treasury stock, and few days later, for example, here, July 15, company buy back 2,000 shares, right? 2,000 shares. So here it means that treasury stock increase. Treasury stock increase. Treasury stock increase. I can give you another date. December 20, 2020. ABC company resell 500 treasury stock. So company can buy back, you can see that company can buy back treasury stock, and company can resell, okay? Company can resell of the treasury stock. So what is the summary here? You can see that normal balance of treasury stock debit, and treasury stock sometimes increase. Sometimes increase means when company buy back the treasury stock, and treasury stock sometimes decrease. When treasury stock sometimes decrease, resell of treasury stock. So when company resell of treasury stock, then treasury stock decrease. Do you understand here up to here? Any question? So company can buy back the share, and when company buy back the share, that means treasury stock increase, and few days later company can sell some of the share again, then treasury stock decrease. So if normal balance of treasury stock is debit, so when treasury stock increase, it is debit or credit? Debit. Very good. Because normal balance is debit, right? If normal balance is debit, always increase, it is debit. Always increase, it is debit. Very good. So we record debit when company buy back the treasury stock, because treasury stock increase. And when treasury stock decrease, it is credit. Credit. So do you understand up to here? Now you can see here this information. When company buy back 2,000 shares of treasury stock, so you buy something, right? Here. So you know that if you buy something, you have to pay cash, right? You have to pay cash. So you go to the market, you buy something, and you paid cash. So it is called the cost price. I repeat again, when you buy something, when you buy something, you have to pay cash and you have to follow the cost price. And this price, the money you paid is called the cost price. Okay? It's called the cost price. So we can come here when company buy back treasury stock. It's maybe anyway. So cost price is we assume that it is $50, for example. $50. Now when we sell, so this $50 come here. Something like this. $50 come here. That means we buy back. Now look at here that what is the other transactions related with treasury stock. So you buy treasury stock for treasury stock and the cost price is $50. Now a few days later we find that we sell treasury stock. We sell treasury stock, and when we sell treasury stock, we may have three things happen. Okay. So when we sell at the time, cost price may be equal of market price. So you buy $50, you can see that you buy it $50. When you sell it, so this is the cost price when you purchase it. This is the cost price. And when you sell it, it's maybe also $50. If this is the case, market price equal, you can see that cost price equal market price. What is your cost price? Your cost price is $50. And why it is cost? Because you buy it, right? If you buy something, you have to pay cash, so this is the cost. Now when you sell it from market, you will receive cash. So if you receive cash $50 and if your cost price also $50, what is the information we can write here? No gain, no loss, right? Why no gain, no loss? Because you buy treasury stock by paying $50, and when you sell it, you receive also $50. So you do not have any gain, you don't have any loss. But it may not be similar every time. Look at another example. You buy, the cost price was $50, but when you sell, you find that market price is lower, maybe $45. What is the problem here? When you buy treasury stock, you paid $50, right? But when you are going to sell it, you are going to receive only $45. So gain or loss here? Loss. So what is the loss here? Difference. So the difference is here $5, right? So $5 is called loss. We have another name. It is called discount. Can you remember? Discount. So we have another name. It is called discount. So $5 is the discount. Look at another scenario. Your cost price is, look, cost price is always similar because you already paid this money and you know the cost price. Now, cost price is lower, but the market price is higher. What is the situation here? You purchase $50 share, right? Treasury stock, and when you sell it, you receive $55. So you have a gain or loss? Gain. So $5 gain. Gain means premium. Gain means premium. So this is the story here. Now, what are the accounts title involved here? Accounts title for treasury stock. So what are the accounting titles for the recording of treasury stock? For recording treasury stock transactions. So we have several titles here. One is called the treasury stock. Another is called cash. So why cash? Because when you buy, you pay cash, right? When you sell, you receive cash. And for gain or loss, can you remember, when you sell common stock, when you sell preferred stock, you cannot record gain or loss. Can you remember? You cannot record discount, you cannot record premium. So another things we have to write is called additional paid in capital from treasury stock. So these three accounts you have to consider whenever you are going to record the treasury stock transactions. So only three accounts: treasury stock, cash, and additional paid in capital. Now, previously I told you that treasury stock sometimes debit and sometimes credit. Do you understand? So we have to record treasury stock sometimes in the debit side or sometimes in the credit side. Why? Because I already told you here. Here. Treasury stock increase means debit, right? And treasury stock decrease means it is credit. Do you understand? And when treasury stock increase, when we buy back. When we buy back, our treasury stock increase, and when we resell, our treasury stock decrease. Clear? So I write here, treasury stock is one account. Treasury stock is one account, and it is sometimes debit. It is sometimes debit, and it is sometimes credit. And I already explained when it is debit, when it is credit, right? Do you have any question? Now cash again, same. Cash again, sometimes debit and sometimes credit. Cash again, sometimes debit, sometimes credit. Why? Because you sell and you receive cash, right? If you receive cash, then cash debit or credit? You receive cash, it is debit or credit? Do you know? You don't know when you receive cash debit or credit? Debit, yes. So, and when you pay cash, your cash credit, right? So again, cash sometimes debit, sometimes credit. Then additional paid in capital also sometimes debit, and sometimes credit. When it is debit, can you guess when it is debit? If we have a loss. Here you can see that $5 is the loss, right? $5 is the loss. Do you understand? When we have loss, then we record additional paid in capital from treasury stock debit. Then we have another gain, right? We have another gain. So when we sell our treasury stock, if we have a gain, it is credit. So loss for debit and gain for credit. Clear? Treasury stock sometimes debit. Now try to recall. Treasury stock sometimes debit. When treasury stock debit? If you buy treasury stock debit. When you record treasury stock credit, if you sell treasury stock. Okay. Now another important point for treasury stock. for treasury stock, another important point you have to remember that treasury stock always follow cost price. So whenever you are going to record treasury stock in the debit side or credit side, the rate should be the cost price. According to this example, which one is the cost price? $50, right? $50. Yes. So always follow this cost price. Do you understand my point? Whether you record treasury stock in the debit side or whether you record treasury stock in the credit side, the rate, okay, the rate should be always the cost price. Now, what should be the cash amount here? Cash amount always follow market price. Look at here, we already have market price here. Market price sometimes $50, market price sometimes $45, market price sometimes $55, right? Do you understand? So treasury stock always follow cost price. Treasury stock always follow cost price, but cash always follow which price? Cash always follow the market price. Clear? Then what is the price followed by the additional paid in capital? Which amount we should write under additional paid in capital from treasury stock? It is called the difference between cost price and market price. Look at here. The difference between cost price and market price here is $5, right? $5. So this $5 we are going to record. We are going to record under additional paid in capital. Clear? So I repeat again, treasury stock always follow cost price. The question will give you this information, what is the cost price. Whenever you are going to record cash always follow the market price. Question will give you this. And the difference between these two may be gain or maybe loss, or maybe no gain, no loss. If no gain, no loss, then we no need to record any account, right? But if we have a gain or loss, look at here. If we have loss, then we are going to record additional paid in capital in the debit side. Okay, do you understand? If we have a loss or discount, then additional paid in capital from sale of treasury stock record in the debit side. Then we have a gain. If we have a gain, then we are going to record this additional paid in capital from sale of treasury stock in the credit side. Because we cannot write loss, we cannot write discount, we cannot write gain, we cannot write premium. Only one account. Which is the account? Additional paid in capital from treasury stock. Gain means credit, loss means debit. Now we can see some examples. Exercise 1. So first transaction we can see here. On May 3rd, XYZ company reacquired means another term is called buyback. Reacquired means repurchase. Repurchase means buyback. Okay, buyback 3,200 of its own common stock at $42 per share. So on May 3rd, XYZ company required means buyback. How many shares they purchase or buy back? 3,200 shares of its common stock. So when company, I told you that here, when company buy back common stock, it's converted into treasury stock, right? So here company buy back its own common stock, so it's converted as treasury stock. It's converted as a treasury stock. And how much company pay? $42. And this $42 is called the cost price. Do you understand? Company repurchase or reacquired. Okay, reacquired means another word of the reacquired is called repurchase. Repurchase, or another word is called buyback. 3,200 of its common stock, and when company buy back their own common stock, it converted as treasury stock. So here treasury stock increasing or decreasing? Treasury stock is increasing or decreasing here? Increasing, right? Because you buy back treasury stock. And how much money you paid? $42 per share, and it is your first price. So now let's see the journal entry here. So date, then accounts titles, then we have reference, we have debit side, and we have credit side. So this is the format you have to follow. Now, what is the date? Date is May 3rd. This is the May 3rd date. This is the May 3rd. What happened at that day? At that day, company buy back treasury stock. So when company buy back treasury stock, I told you that treasury stock sometimes debit, treasury stock sometimes credit. When debit, if company buy back. So when company buy back treasury stock, then treasury stock debit, right? So treasury stock now debit. Treasury stock debit, and look at the calculation. Company buy back 3,200 shares. Okay, company buy back 3,200 shares, and company's cost price is $42. $42. This is the cost price, and the amount here is 134,400. So when a company buy treasury stock and company pay cash, right? So I told you that cash sometimes debit, cash sometimes credit. Why it is credit now? Because you paid cash. You paid cash, so cash credit, and you paid this money. So what is the narration? Record. So you buy back the treasury stock. So this is the narration. So do you have any question here? No question, okay. Then we can see another transactions. Another transactions. On July 22nd, XYZ company sold 2,000 of the reacquired share. So reacquired share again. Reacquired share means treasury stock. So on July 22nd, XYZ company sold 2,000 of the reacquired share. 2,000 of the reacquired shares, and reacquired means I already told you that it is the treasury stock at $47 per share. And this $47 per share, it is the market price. This amount is the market price. Market price. So you sell how many shares of treasury stock? You sell 2,000 shares of treasury stock, and how much cash you receive from market? Per share you receive $47. Now treasury stock is increasing or decreasing here? Treasury stock is increasing or decreasing? Decreasing, right? So treasury stock is decreasing. So treasury stock increased debit. Treasury stock increased debit, and this is July 22nd, and we find that at that day we sell our treasury stock. At that day we sell our treasury stock. So treasury stock credit. Treasury stock credit. And we sell how many shares? We sell 2,000 shares. Now I told you that treasury stock always follow. Treasury stock always follow which price? Treasury stock always follow the cost price, right? According to this question, which one is the cost price? I already mentioned you that. According to this question, cost price is $42, right? Cost price is $42, and treasury stock always follow this cost price. So we sell treasury stock 2,000 shares, and we write which amount is the cost price. Look, treasury stock, this is the cost price. So this amount you cannot change. Whenever you buy or sell treasury stock, it should follow the cost price. So you sell treasury stock decrease. It is $84,000. So you sell treasury stock, now you receive cash. Now you receive cash. And can you remember, cash amount follow which rate? Cost price or the market price? Cash amount follow cost price or market price? Market price, very good. So we sell treasury stock with cost price, and we receive cash from market. What is the market rate? I told you that this is the market rate. Market rate is $47. So the cost price is $42. Cost price is $42, but from market you receive $47. So from market you receive $94,000. Now it is a good news or bad news? Good news, because you have a gain, right? And I told you that if you have gain or if you have loss, you cannot record this loss or gain. Which account we have to record? Additional paid in capital from treasury stock. This one should be recorded, right? and it is now credit. It is now credit. It is now credit. And here we record which amount? The difference amount, right? We record difference. Difference is $5. Sorry. Yes, difference is the $5 here, right? $3. No, 47, right? Yes, $5. So difference is the $5. We are going to write the difference. Difference is the debit side or credit side? Difference we are going to write in the debit or credit here? Credit, because credit side is lower. So $5 per share is $10,000. Yes, 10,000. So additional paid in capital from sale of treasury stock is now credit because it is the gain, and this is the difference between, look at here, this is the difference between cost price and the market price. So this is for resale of treasury stock. So this is buyback treasury stock, right? Buyback treasury stock, and this is the resale of treasury stock. So look at another transaction. Look at another transaction. On August 30, XYZ company sold the remaining shares So on August 30, XYZ company sold remaining treasury stocks at $40 per share. Now, how to calculate the remaining? What is the amount of remaining share here? So you buy 3,200 shares, right? Okay, so you buy 3,200. From here, you sell 2,000. What is the remaining here now? 1,200, right? These are the remaining shares. The remaining shares company sold, and the market rate is the market price. And the market price is $40. Now let's see. Again, we sell our treasury stock. Treasury stock should be credit. Now it is August 30. Treasury stock credit. So how many treasury stock we sell? We sell 1,200 treasury stock, right? And which price we follow here? Again, treasury stock, look, 42.42, right? 42.42. So treasury stock should always follow the cost price. So what is the amount here? Amount here is 50,400. We sell treasury stock $50,400. But how much cash we receive from market? So we sell 1,200 shares. And from market, according to this question, from market we receive $40, right? From market we receive $40, it is $48,000. Now it is a good news or bad news. The cost was 50,400, but we receive cash from market is $48,000. We have a gain or loss here? Loss. So if we have a loss, then we cannot write loss. We have to write additional paid in capital, and it is now debit. 2,000 400 debit. So you can see that additional paid-in capital, if it is gain credit, additional paid-in capital from sale of treasury stock. If it is loss, it is debit. And this is the narration. Record resale of treasury stock. So this is the question and here is the solution. So in the exam, you have to follow my style. First, debit item, then you have to have a space, credit item, then narration. Okay. If you don't follow this, you will lose your grade. So this is exercise 1. Let's see exercise 2. Record the treasury stock transactions given below. Purchase 400 shares of capital stock. Okay, purchase 400 shares of capital stock as treasury stock. Okay, purchase 400 shares of capital stock as treasury stock, paying $60 per share. For example, this is the first transaction, right? Company purchased 400 shares of capital stock as treasury stock. Clearly mentioned here as treasury stock and pay $60. So $60 here is the cost price, right? $60 is the cost price, very, very important amount here. This is the cost price. And whenever we record the treasury stock, we should follow always this amount, right? So what is the journal entry for this? You can copy from here. So look at here, we buy treasury stock debit. So we buy 400 shares. We buy 400 shares, right? And what is the cost price according to this question? Cost price is $60. So what is the amount here? Amount here is $24,000. And we pay cash credit, $24,000. And we don't have any debt. If we don't have any debt, just put the number. So do you understand up to here? Company purchase 400 shares of capital stock as a treasury stock and pay $60 per share. Treasury stock increase, it is debit. And we pay cash credit. Do you understand? Now look at the second question. Sold 300 of the shares of treasury stock So sold 300 of the shares of treasury stock at $65. $65 per share. Now we are in second transactions. Companies sell treasury stock. How many treasury stock companies sell? Companies sell 300 treasury stock, right? And what was the market price? So I told you that this is the market price. Market price. So companies sell treasury stock, and it should always follow. It should always follow cost price. Can you remember? Treasury stock always follow cost price, right? So company sell common stocks 300 share for $60, and the value is $18,000. Now, how much cash company receive? Company receive cash is about $65. That means 19,500. So I repeat again here, you can say the company sell treasury stock. Company sell treasury stock, 300 shares they sell, and the cost price was $60, so $18,000. But from market they receive per share $65. That means they receive cash 19,500. Of course, this is the gain, right? And gain is the difference. So what is the difference here? 1,500 is the gain. So this is about second transactions. Now we can see transaction 3. Sold remaining shares of treasury stock. Sold remaining shares of treasury stock at 50 per share. Again, so this is the market price. And you have to do some little calculation how to determine the remaining shares. First, we buy 400 shares minus 300. Now we have remaining 100 shares. So 100 shares remaining. We are going to sell it to the market, and market give us $50 per share. But the cost of this 100 shares was $60, right? So we sell remaining shares 100 treasury stock credit, and it always follow cost price. This is the cost price. So 6,000. 6,000. So we sell treasury stock credit 6,000, and from market we receive cash is only 50, right? $50. That means $5,000. The cost of 100 treasury stock, okay? The cost of 100 treasury stock was $6,000. It was your cost price. But when you sell it, market give you $5,000. So $1,000 is the loss, right? 1,000 is the loss. So additional paid in capital, $1,000 debit. So this is our second exercise, and this is the solution. Do you have any question?